Adam Hewison here, co-founder of MarketClub with your midday market update for Tuesday, the 19th of June. Wow, hard to believe, but lots going on, a big strong rally in the equities markets. And let's take a look at the S&P that we have right on the screen right now. And as you can see, this is today's action. Boom, we came out of a nice base. And longer term, we still have our monthly negative trade triangle, which is still there from 1312. I know the market's 1359, but the reality is that hasn't changed yet. And what is a reality is this, and I'm going to draw it in right now. So we're going to go from the top. Those of you who've seen these videos before, you know it's a Fibonacci retracement. And you can see based on our retracement pattern, this is 61.8%. We're right there. And this was 50% we heard yesterday. And I think that these normally are what we call thin air in terms of markets. If they're going to turn, will turn from these retracement levels. If you look at the market coming down like this, we're coming back up. It's a reaction. Is it going to go back down again? That's the question. You're also overbought here, and I think that's another area that you want to be looking at. So I think for the moment, I wouldn't get too enthusiastic about buying the equities right now. I think there's still a lot in the air. Not to say you shouldn't be in certain stocks, but certainly the overall indices are in an area that they've had problems with before. So this is a 61.8%, a perfect Fibonacci retracement. Is it going to reverse from here? We need to see some other signals to conclude that subject. So let's go on to our next market. And it's pretty much the same in the other markets we're looking at. Oh, hold on. The NASDAQ is making that turn, not quite as strong, certainly, but and it's not quite like where we are in the, let's go here. Not quite there yet. 2,951 would be a 61.8% retracement, or 60. Let's call it 62. But we have hit over the 50 level, so we're in an area which is thin air. We are monthly trade triangles negative. Only the weekly and the daily are positive, which is still some upward momentum, and we are overbought. So let's going back to our next market, and that's going to be the Dow. And the Dow, if we put the Fibonacci retracement in there, just go from the highs, very simple with MarketClub, and go to the lows. And there you see a 61.8% retracement. So the Dow and the S&P 500 are in thin air in terms of they're at areas they potentially could reverse from. So this is something to look at and pay close attention to, because I've seen this happen oftentimes. People get very enthusiastic, and then suddenly they don't know it's a 61.8% retracement, and the market starts to reverse in the next several days. So let's see how that plays out. Next market we're looking at, going to rip through some markets pretty quickly here. Silver, absolutely zero going on there. Much the same with gold. Gold is an area, it's beginning to make an accumulation at a higher level. However, it's not enthusiastic. I wouldn't get enthusiastic about this market until it really goes over 1,700. Right now, it's just kind of in la-la land. And I think the action today is not particularly positive. So let's go on to copper. Copper is pretty much the same gig there, sideways, no real trend. The monthly and the weekly are negative, meaning the trend is down. 65 is a trading range, which you can see that we've got here. And really that's the basis of this market. So looking at our next market, which is crude oil. Crude oil is sort of going nowhere in a hurry. And you can see really since June 3rd, we've just basically gone sideways in this market, just sort of like, and we need this to be resolved either one way or the other, breaking on the upside or breaking on the downside. Certainly a close under 82, I think would be very, very negative, and that's about 2 cents away from where we are right now. Or $2, however you look at it. But generally speaking, a close under this level, I think would be very, very negative. But having said that, we do have a negative monthly, weekly, and daily, so there's nothing to get excited about. Midterm right in the middle of the Williams percent R oscillator, and it's not oversold, it's not overbought. We need to get down that level before we get really excited about being short this market. So let's clear the screen, go to our next market. and that's going to be the euro. Really kind of surprised the euro bounced back as much as it did. In fact, it's live. It's really doing very, very well. Remember, we had a bearish engulfing line here. The red line is a bearish engulfing line. We said if it closes lower, then I think we'll see this market really come under more pressure. And of course, it didn't do that. It's closing higher today. So I'm really kind of surprised at the action, as of course a lot of other traders are. The general consensus is this market's going to go lower, but it hasn't done that yet. So let's put a Fibonacci retracement in here just for fun and see where this all lands itself. So we draw it down to the very, very low. We certainly got to the 38. The 50% is around 128. The 61.8 is about 129. So between 28 and 29, this must be where the market should probably run into super resistance based on the Fibonacci retracement level. However, having said that, I thought the 127 level is going to be enough to hold this market. Evidently, so far, it hasn't been able to do that. But let's go to our next market. The next market is going to be the CRB index, which is a sign of inflation. As you can see, we've just started to move out of this level. And if we put a close-only chart on, which is this little line graph right here, you can see if we close up here, it looks like we've made somewhat of a double bottom, but we're trying to move this market higher. And let's scope this out just a little bit further to sort of 6 months. And I still think the longer-term trend is more of a deflationary trend at the moment, as opposed to an inflationary trend. Because you can see here we are, if we go back to the beginning of the year, prices are a lot lower than they were at the beginning of the year. So that's a deflationary move. When this market moves down, it means that commodities in general are getting less expensive. So we do have 3 stocks on the move, and we're going to be looking at those now. The first one is Raytheon. RTN is the Raytheon, I should say. That's how you pronounce it. It's a stock that's making a move today. We had a signal today, just today, and you can see if I put my trade triangles on there, the monthlies, you'll see this. I'll just give you a, hold on just 1 second. I'll put my candlestick chart on there, and there you have it. And we had a monthly signal today that just came in today. So again, new highs on this stock for quite some time, and it looks really, really good. And it's really gone straight up. So I would not be surprised to see Raytheon challenge the 60 area from where we are right now. It's very, very big area, base area, plus 100. And I think this is the key. This has turned up, by the way. If I just, let me just hit a refresh. And let's go to Raytheon. There's plus 100, so we know everything's turned up. And it just, yeah, there we are. So it looks like it wants to go high. Let's go to our next stock. And the next stock is Costco. Very successful group of merchants. And that also had a monthly that came in today at 92.10. It's 91.57, so that's another opportunity to buy the stock. Looks like it wants to go high. It's obviously done very, very well here over the, you can see the first buy signal at 59.16, out at 77, so it's almost $20 profit. Back in at 83, and that was out at 83, probably just about scratch trade, and then we're back in. So it looks like this could be a good trade. So let's go to our next market, and that's going to be COG. That's Cabot Oil and Gas. And that's a plus 90, so we know it's a green. There it is. There's the monthly trade triangle at 30. It looks like 37. It's 36.50 right now, so you can buy it at a little bit of a discount, but nonetheless, that's market served very well. You can see here's the signal 16.49 up to 29. That's $13 profit. You're back in here. This would be a loss 40.73, and you're out at 30, so it's $10. So you're still ahead on this market overall, which is a good thing. So anyway, one of the things I want to share with you today is our personal one-on-one Market Club coaching. Is it right for you? The call is free. The consultation is free. So what are you waiting for? Give us a call. Have one of our consultants tell you about the program and explain to you how you can benefit personally from using this program. 877-219-1482. I think you'll really enjoy it. So give us a call. I'll be back tomorrow. We have our big show tomorrow, and certainly we hope that's going to help you improve your trading. It's our Wednesday show, and we start at 4 o'clock in the afternoon, and we certainly hope you can join us. So this is Adam Hewison for Market Club. Have a great day trading, and I'll see you tomorrow with a big show.